Boston Fed President Eric Rosengren giving a speech to the Greater Providence Chamber of Commerce at this hour. Steve Liesman has some highlights for us. Steve.
Sarah, thanks. Yeah, a very pessimistic outlook from the Boston Federal Reserve President Eric Rosengren. He's saying more fiscal and monetary policy stimulus is likely to be needed because he expects a disappointing second half rebound, at least one that's not as rosy as the one when the coronavirus shutdown first happened. He's forecasting double-digit employment through the end of the year. And says job losses have been highest among minorities, including Hispanics and African Americans and low-income workers. He says, quote, even this dire outlook may be too optimistic, and that's because his forecast doesn't fully include the possibility of a second wave and another shutdown. He's looking at the containment processes in place around the country and says it could lead to a need for a more prolonged shutdown. A more rapid recovery, if that's what we want, he says, requires better containment, and he sees substantial risks of reopening too fast around the country. Finally, the Boston Fed is running the Main Street lending program. He said he's seen a steady stream of interest in the program from lenders. 200 have already registered, he said. That's still a small number compared to the thousands of lenders, but he says they continue outreach. Sarah, I looked at the summary of economic projections from the Fed. There is one Fed member who has a 14% unemployment rate for the end of 2020 and one who has a 12% for the end of 2021. I guess it's not the worst bet in the world to think maybe that's Rosengren.
It could be him. Yeah, he sounds really downbeat. Steve, what would more monetary stimulus from the Fed look like if he got his way?
Well, it's hard to know. Eric, you'll remember, was one of the first to call for the Fed to buy corporate bonds just at the outset of this. Even maybe before that, he said that might be a possibility for the Federal Reserve. It's hard to know. Maybe doing more of the same. A quantitative easing program is one idea that may be out there. In other words, a specific one rather than for market functioning. I guess there's yield caps, and ultimately, I guess at the very, very, very end of the road, there would be negative rates. But I think the Fed's a long way from that.
Right.